Hello everyone, this is Harjap Singh, Commercial Real Estate Advisor at Colliers here in the Greater Toronto area. It's a very special day today. We're at Scotia Plaza in downtown Toronto. We're headed up to the 37th floor to the executive suite of what is undisputably one of the most influential companies in Canadian real estate, KingSett Capital. KingSett is a private equity real estate investment firm with over $18 billion of assets under management, including this building right here. KingSett's founder, John Love, is often called the smartest man in Canadian real estate. And today we're going to sit down with John's appointed successor and the new CEO, Rob Kumer. We're going to talk to Rob about what makes KingSett so special, what led to its growth, and we're going to talk about the Canadian economy, and we're going to talk about what KingSett is seeing from its 37-story view, what the rest of us might be missing. So let's go say hi to Rob and have that conversation. Rob, it's a pleasure to be sitting down with you today. Thank you so much for making time.
My pleasure. Always happy to do these things. And actually, I've done a number of podcasts over the last little while, and most of them are Zoom. Mm-hmm. They're conducted by Zoom,
right?
And sometimes in other locations. What so far, I mean, it's early on in the interview, but what's nice about this one so far is that we get to do it in our office, in KingSett's office.
Right.
So that's always very comfortable and nice for me. So I appreciate you guys coming over and making it happen here.
Yeah, no, want you feeling at home, and it's nice for us to be here as well. It's
Great.
A beautiful building, and
Thank
I
you.
remember being here 10 years ago, and the transformation since that time is pretty evident. And you guys have done a great job with this.
Thank you. You know what? It's been a bit of an evolution, but we've got it in a spot now where it seems to be firing on all cylinders. We're zero carbon. We've added some amenities to, the bottom few levels of the building, redone the food court, added some really energetic touchdown space for tenants and customers to hang out and spend time in. We're adding an amenity floor now to floor 68, which is on its in its design stage.
Right.
But that plan's getting refined and hopefully will get implemented over the next year or so, and that's going to be amazing. So the tenants are happy, customers are happy.
Yeah.
So all is good so far.
Yeah, and I think it goes back to the whole idea of that delineation between office spaces like these versus office spaces that haven't kept up with the times.
And you're seeing it. You're seeing it play out in real time, right?
Yeah.
So for those landlords who have not been properly investing in their buildings, are getting caught, a little off guard,
right.
And they're going to have some challenges. So we've done a good job. Our asset management team and our property management provider, Vental, here at Scotia, has done collectively have done a remarkable job at making sure we stay up to date. We're forward thinking and meeting the needs of the customers. So that's first and foremost.
Yeah, I love that. And I've tried to do a very high level summary of what KingSett is for those of us in the audience who are not familiar or too familiar. I'd love to hear from you. What was the genesis of the firm? How do you go from being founded in 2002 and then within 2 decades take on such a dominant position in the market? What's the story?
Yeah, so I'll do the best I can. I wasn't here in 2002. I started here in 2004, so there was a little bit of time where John was obviously founded the firm back in the spring of 2002, really with a simple premise, and that was to give the opportunity to institutional investors a way to invest in value add and opportunity real estate. Right. So if you think back to 2002, the institutional world here in Canada were very good at core real estate. They all had core platforms. You think of the Oxfords of the world and Cadillac Fairviews of the world and Aimcos and so on. They are all very good at operating core institutional quality real estate, and they all had sizable portfolios doing that. What they didn't have was a platform with which to operate and invest in opportunity real estate. So real estate that was event driven. You'd buy, you source an opportunity, you execute a strategic plan, whatever that is, and then you exit and you generate profits that way. So KingSett's first fund, LP1, Growth LP1, which was started when the firm began, was a way for institutions to access opportunity and value add real estate here in Canada. And so that was very successful, and we've been building on that ever since. As KingSett has evolved over the years, what we try to do over time is identify places in the market, similar to the way John identified that hole in the market in 2002. We've tried to identify other holes in the market where investors want access to certain kinds of real estate investments and provide them with the opportunities to do that, and create funds, pools of capital to go and execute those strategies. So in 2006, we started a credit platform. Right. And that was all about investing in real estate debt. In 2008 and 2009, in the global financial crisis, when there was a real need for yield, we started our core fund, right, which operates a portfolio similar to what the institutions were doing in 2002. So many investors in the core fund are high net worth and ultra high net worth private investors, not the institutions, because they needed access to the core world. And then beyond that, we started our urban infill fund. We have our Royal York Hotel LP. We have a residential development fund. We have an affordable housing fund. So we've tried to build out the platform. Really, at the end of the day, what we view ourselves as today is a one-stop shop for real estate investment. So if you are an institutional investor, a private investor, it doesn't really matter. You can look to KingSett and say, we'd like you to be our real estate investment platform. And it's sort of an a la carte menu. You can take what you want. You can take some value add, you can take some core, you can take some credit, you can take some development. You can do what you want as it fits your own portfolio. Right. And that's been a very successful formula. So our mantra here is really, we want to be a full service asset management platform that provides access to all forms of real estate, every asset class, every part of the capital stack in every market across the country.
Wow, that's seems to be the secret for your success, because I feel like the mantra for a lot of firms is just pick a niche and just run with it. But the idea is that you've gone.
Yeah. So in some senses we've broadened our business, and in a lot of senses we've broadened the business. It's pretty complex today. There's a lot of things going on, a lot of different strategies, a lot of things to choose from. In other ways, we've been niche. I mean, there's lots of our competitors who have picked other geographies to operate in, right? You'll see lots of businesses, real estate platforms, who will go down to the US, they'll go to Europe, they'll go to Asia, they'll do those kinds of things. What we've decided to do is focus on a relatively narrow basis geographically, meaning Canada only, but within Canada, do everything. So go deep, narrow and deep on the Canada file. Right. And so far, I think that's been a big part of how we've found success here, and we'll keep it going.
Yeah. So I guess investing in KingSet's almost a proxy for investing in Canada in that way.
In a real estate context?
Yeah.
I think so. I mean, if you look at our funds, they really do span all the asset classes, all the markets, and all the points in the capital stack, to both credit and equity. So yeah, I think if you look at our business as a whole, it would be a good proxy for where the Canadian real estate market is going, where it's been, and how it's behaving.
Yeah, for sure. And I want to, in a moment, jump into your personal background and upbringing. Sure. Before that, now that we're talking about investing in real estate, that's a little bit more opportunistic and value add versus just the core, which was the genesis of the firm. I remember reading on KingSet's website, the whole idea behind the firm is to combine an entrepreneurial mindset with managing risk in an institutional manner. Right. That seems like almost two very opposite energies. It's like trying to be a speedboat and a container ship at the same time. Right. How do you pull that off in a very real sense?
Well, great question, and it's something. It's the push and pull that we struggle with every day, right? To find the right balance. We're raising institutional scale capital. So what's a big part of what we've been successful at, and I think leads to a lot of the opportunities that we end up investing in and taking part in, is our ability to raise institutional scale capital. So we have pools of capital that would be competitive with the largest institutions in the country. At the same time, and I would go one step further and say we have a risk analysis and a risk lens that would be comparable to the most rigorous institutions in the country as well. We have to combine that with decision making. We have to cut back on bureaucracy. We have to empower our people to make decisions, to use their judgment. We have to pick smart people, which I believe we've done. But we also then have to empower them and create the environment here where people can act and react in real time. And that's the secret sauce. I mean, ultimately, I think that's where we have distinguished ourselves from many others. Not everybody. I mean, we have a very strong competitive set, but that I'm very proud of being able to maintain that entrepreneurial mindset, that entrepreneurial energy over the years. But at the same time, I view ourselves to have institutional rigor, an institutional perspective on risk, and like when you can do those things, magic happens. Now, I can also say that we owe a lot of it to, we've done a lot of things right here, but at the end of the day, we owe a lot of that to the trust and the relationships that we have with our stakeholders. So, for example, we have an investment committee in our opportunity fund strategy, which approves every deal. Okay, so the investment committee is represented by the 4 largest institutional investors in our growth funds, and that committee approves every transaction we do, buying and selling.
Right.
If there is something that we need approval for, their responsiveness is key for us to getting it done, right? Because we're often operating, whether that means negotiating a deal or submitting a letter of intent or a purchase agreement or an offer or what have you. And in order to do those kinds of things, we have to know that we can go back to our stakeholders, get approval to do things in really short periods of time. And so our stakeholder group has been extraordinary. And they react with the same entrepreneurial energy that we try to act with. And that's ultimately what gives us the flexibility to move forward and do things, in an entrepreneurial way, is their support, the leeway they give us to act when we think we need to. Right. So there's a lot of things we can do right here, and I think we've done a lot of things right, but ultimately we need their support, their trust, and they've done a phenomenal job for us over the years.
Clearly.
Yeah.
And I see the investment committee almost like the nucleus of the firm. It's like the decision-making engine. And I'm sure a lot of people are curious, how does it function? How do you handle disagreements and actually reach decisions?
Yeah, so there's an internal investment committee that's a little less formal. And then there's the board investment committee, which is very formal. So internally, the way investments work here is we have an investments team, and that would be 15 people, all the way from our chief investment officer, who's Colin Berlick, and he's got a couple of senior guys, and then down and through to the analysts. And that team is out talking to people, sourcing opportunities, looking at broker packages, meeting prospective JV partners, whatever it is. And so they're out finding the opportunities. They come back, they underwrite, they talk, they meet amongst themselves, they decide what, at the first glance, they decide and choose what they want to spend time on, what they think looks good, and and just as importantly, what should be discarded relatively quickly, right? I mean, time is our most precious asset, right? So it's all about weeding out the things that you don't think are going to work. That's often, the toughest job of all. But ultimately, when they focus on certain things, then what it does is it will generally come to every Monday morning, 8:30 a.m., 52 weeks a year, we meet. There's an investment committee meeting. That investment committee meeting has roughly 20 people in it, which is mostly senior people. It's cross-functional, so it'll have a couple of investment people, a couple of credit people, a couple of asset management people, finance and development people, and so on. So that meeting is where things typically will get vetted, and we'll choose to move forward with certain things and choose not to move forward with other things. From there, analysis gets done, the offers get submitted, that all sort of goes in the normal flow. And ultimately, when we decide we want to commit to something, it goes to me, John, and our investment committee at the board, and they ultimately approve it. And generally, we've got, a really good sense as to what gets approved and what doesn't. So by the time it gets to the board, we sort of know, whether it's going to be approved or not. And those are generally, pretty easy. Those are generally pretty easy. It's generally a pretty easy process. If it's a big deal, material deal, if it's a new asset class, or if it's a new kind of thing that we haven't done a lot of before, we'll generally go in advance and socialize it and make sure everyone's comfortable with it. We don't technically have a unanimous rule, but we won't really act unless there's consensus amongst everyone.
Right.
So there's a number of ways, a number of places along the way where things can get shelved. And so by the time it comes out the other end, like, we feel pretty good about it.
Mm-hmm. And how do you manage time? Going back to your earlier point, if you found an opportunity, obviously there's competitors for a great asset.
Yeah.
What's your turnaround time between discovering an opportunity and getting the board's approval to go ahead?
Well, I mean, we can underwrite things really quickly. I mean, part of what makes this environment special is that because we have focused so intently on a Canada-only strategy, and we have long-term relationships in this market, when opportunities are uncovered, we can generally assess them pretty quickly. When there's a building for sale in Canada, someone in this office, we have 160 people here, someone here has bought it, sold it, financed it, managed it, leased it, built it, over the years. Knows the owner, knows the vendor, knows the guy that bought it, knows the bank that has the loan on it, knows the physical consultant that did the inspection. I mean, generally, we've got really good intel into a lot of the assets that are trading day in and day out. So our ability to assess things, I think, distinguishes ourselves from others. Again, it goes back to when we decide we want to do it, which can be a fairly short process. We have the capital available, so we always have the gunpowder to do something that we want to get done. And we have had amazing support from our stakeholders who are so responsive that, I mean, we can get responses out of our LPs in 20 minutes if we want to. I mean, it's an email. I mean, we put together a presentation, send out an email, and these guys respond. I mean, they're extraordinary. Mm-hmm. Our investors, particularly the investment committee investors in the Opportunity Fund, have been an extraordinary asset for us. And we owe a lot of gratitude to their, not just their approvals, like their responsiveness, but also their guidance and their advice and their support.
Right. So let's take a step back and focus a little bit on your background. Like, you graduated, I believe, in 1999.
Yes.
From Western. You've had a 25-year-long career.
Yes. Almost
21 of those years have been at KingSett.
Yes.
So 4 years before that at RioCan.
Yes.
Pretty big heavyweight in its own right, and then
Yes.
CentreCorp before that.
Yeah.
I want to.
They call themselves, and they'd be upset with me if I didn't correct you, because they've changed, they've rebranded. They used to be CentreCorp North American. CentreCorp was the management business. North American was the development business. Mm-hmm. They've since aggregated their brand into North American, so they don't use CentreCorp anymore. So I'm and in case they watch this, which they might, I want to make that clear, because they've told me before they don't want to use CentreCorp anymore. Okay,
CentreCorp. My apologies for the name that Rob just shared.
It's North American Development Group.
North again for the second time.
NADG. There you go.
NADG.
Yeah.
My sincere apologies. So I want to take a step further back.
Yeah.
Like, what was your early upbringing like?
Yeah.
What were some of your formative experiences?
Yeah, good question. I mean, so I had a pretty straightforward upbringing. I mean, I wish I had an interesting story to tell you. I wish I could tell you I came here, from somewhere else with no money in my pocket, and I built a life for myself. Like, I wish I had something compelling to tell you. I had a pretty straightforward upbringing. I grew up in Toronto. My whole life, and this is both a plus and a minus, and we can get into some of this stuff maybe later, but my whole life generally has taken place within about 5 kilometers of where we're sitting. Okay. Wow. Born and raised in Toronto, Midtown Toronto. And from there, did my schooling all in Toronto, ultimately went to Western for university. So I spent, a few years down, two hours down the highway. But aside from that, came back immediately and started working. And as you pointed out, graduated in 99 and started working, in Toronto all the way through. So, that's been a plus and a minus for me. I think when I reflect back on the earlier part of my life, there's a big part of me that wishes I spent some time away. I think that I would be better at. I think it would be constructive in helping me, look at the world through a lens that doesn't necessarily relate to Toronto. Mm-hmm. I have a fairly, centric, myopic view of the world, right? Because I've grown up here. This is really all I know. And so part of me wishes that I spent some time away, whether that was through university or whether it was through the early part of my career. And I never really did that. The flip side of that coin is that because I've spent all my time here, all of my relationships are here, right? And not just my family and my friends, but all my business relationships here. I feel like I know everybody, in air quotes, right? Like I can pick up the phone and call a lot of people and immediately have a connection. It's a couple of degrees of separation from a lot of people. Mm-hmm. And so that's been very constructive for me in my professional career. So it's a bit of push and pull. But yeah, born and raised in Toronto, business school at Western, came back in real estate ever since. I started in real estate in 99, all the way through, taking on different kinds of roles. I started in development, then I went to investments, was investments all the way through basically to just a few years ago, and then started taking on elevated leadership roles. And I don't really consider myself an investment guy now. I look at it more like a leadership role, which has to oversee a whole bunch of things.
Right.
But that's effectively where I come from.
Yeah, and to your plus point of just the idea that you spent all that extra time that you could have been away building relationships here.
Yeah.
Something that really resonated with me is something that John, I believe, says is, relationships are the currency of business.
They really are, and John has really taught me that over the years. That really is the cornerstone of everything we're doing here. And you can look at the graphic here behind us. I don't know if the camera picks this up or not, but those are our values. And it's not coincidence that the biggest word, the one that's biggest and brightest and in the middle of that graphic is the word relationships. And ultimately, that's what this organization is focused on and built around. And that's the foundation of everything we're doing. Yeah. So my local upbringing and my local existence is a big part of that for me. Mm-hmm. I just feel like it could have been helpful, constructive, additive, enlightening. To have spent some time away doing something somewhere else with other other kinds of people and other types of people.
Yeah, that's fair.
And that's one of the things that's one of the regrets I'll have to live with. But it's tougher when you get older. Uh-huh. You have kids, a mortgage, a wife, a house, a job. It's harder to do that later in life. It's good to do that when you're younger.
Yeah. So, university students, if you're watching this, go on exchange.
And young people come to me, I see young people a lot because they come looking for, advice or, whatever, guidance, whatever. And it's a lot of what I tell people, young people, and it's something that I've told my own kids. Try to open your horizons a little bit. Try to spend some time away. Leave your comfort zone, for a minute and see what it feels like, Right. And I think that could be a big part of personal growth. I unfortunately, didn't get that, but it's okay. There's lots of other things that have gone. I'm not complaining. There's lots of other things that have gone right. Yeah. I'm fine.
I think you've ended up okay.
But I'm just self-reflection, self-reflection.
Yeah. No, okay. And now that the years have passed, you're at the helm of the firm. What does your typical day look like? What are your top priorities on any given day?
Yeah, so leadership to me is all about making sure the right people are in the right places doing the right things. So it's about setting the priorities, making sure people are organized properly, and making sure everyone's on the right track, and assist and giving help where and when needed. I'm not an expert in office leasing, so I can't help the office leasing people very much. I'm not an expert. There's a lot of things I'm not an expert in. If I look back on my career and my real technical skill set, I'm an investment guy. Mm-hmm. So I can negotiate a purchase agreement as well as anybody, and I can negotiate a financing, as well as anybody. But that, leadership to me is more about making sure we have the right team. So we have the right people, right resources on the right priorities and doing the right things. Mm-hmm. And so that is where I spend my time. Day to day, I love my role. It's hyper engaging. You're often just addressing problems that come up. So my day is full of people within the organization coming and bouncing stuff off me and asking me questions and listening to my input. And as you can tell from this interview, I'm never shy on giving opinions or I'm always happy to talk about things. So I love doing that kind of thing. And at the same time, I learn from people because there's a lot I don't know. So I'm evolving. I've said before to other interviews and so on, that the day I was given a leadership position is not the day I became a leader. I think leadership is about personal evolution and personal growth and you're refining your leadership style and skills all the time, and probably forever. They probably are never perfected. So I took the president role in 2021. I took the CEO role just at the beginning of 2024, just a few months ago. And I'm learning as we go, and we're addressing problems all the time. So it's been a phenomenal ride. I'm so grateful for the opportunity that John and KingSett and our stakeholders have offered to me to run, what I think is an extraordinary organization with an extraordinary opportunity and extraordinary stakeholders. So it's been a lot of fun.
Mm-hmm. And with the extraordinary opportunity comes extraordinary responsibility.
Of course.
So how do you manage it, and what motivates you to perform at the ISO levels?
What motivates me? Well, I think I've got. Look, I'm deep down. I think I am, in a business sense, fiercely competitive. Mm-hmm. So I've attached myself to the brand of KingSett, for better or for worse. So I look at myself really as an extension of the KingSett brand, and I want KingSett to be the best it could possibly be. Mm-hmm. And we've all got a stake in that, right? So me, along with 160 of my partners, we've all got a stake in making that happen. So I think that's what drives, at the end of the day, I think that's what drives me. We've got huge institutions and lots of private investors who have entrusted us with significant amounts of their money. Mm-hmm. And said, we trust you to do what's right and to make us, at the very least, preserve our capital. But if all goes well, make us a whole lot of money. Uh-huh. And so we wake up every morning, reminding ourselves that we don't take that for granted. And it's very easy to take it for granted, right? Mm-hmm. Because you forget about, when it goes on for so long, you forget that. You just take it you can just take it for granted, like it's just going to be there tomorrow. But what we have to remind ourselves of every day, literally every day, is that if we screw it up, it'll be gone. Mm. And our stakeholders have the ability, the right, to walk across the street and give their money to somebody else. Right. So we're here to make sure our performance stands the test of time. Mm-hmm. And we're here for them. And we're aligned with them. We're here for ourselves because we're all invested, but we're, at the end of the day, we're here for them. And they have agreed to reward us well if we do well, and participate in the underperformance if we underperform. So we got to work hard every day to make sure we keep their trust and get at it.
Yeah, and we were talking about this before the interview. I think the small gestures to really show that you take that trust very seriously is the fact that I like wearing a tie, right? And I walk into this office as one of the very few places where I don't feel out of place, because every single person, every man's wearing a tie. Yeah, and I'm sure that's part of that approach.
It's definitely part of the approach, and the tie, the formality. So for women, they have their formality. Men, we have our formality, and tie is sort of like a symbol of formality as far as men are concerned. It's about respect for the support that our investors have shown us, and it's also about a mindset. It's about, I look at coming to work like we're going to battle. Okay, we're going to battle the way an NFL football team goes to battle. They put on their gear, they put on the uniform, they run out onto the field, ready to kick some ass, mm-hmm. right? And that's the way I want our people. That's the mindset I want our people to have when they come in here. You get up in the morning, we don't sleep in, we get at it, we put on the uniform, and we're ready for battle. And we have to fight. This is a fiercely competitive business, mm-hmm. in a fiercely competitive market, and today particularly a tough environment. And we have to come every single day and fight like hell to make sure we're doing all the right things. And part of that is how you dress. Mm. And I think we're getting a little off topic here, but I think the world has sort of lost its mind when it comes to dress code. Mm. And it's one thing if you work at Google or Facebook and you're in Silicon Valley and that's just the way the culture is, fine, no problem. I'm all about, you do what's conventional for your particular market. Right. But we're private equity, we're on Bay Street, We're in the middle of the central business district in the financial core of Toronto, the major market in Canada. We've got banks, law firms, accounting firms, consulting firms, all professional services around us. We've got our institutional investors. We've got private investors who have, again, entrusted us with lots of their money. Let's take it seriously. Let's, as I said, come to work like we're fighting for our lives. And the dress is part of that. In my view, it's a big part of it. So, not everyone agrees with me on that. I'm a bit, sometimes I feel like I'm a bit out on an island, but I don't care. And it's interesting. Just again, we're going a little off topic, but it's really important. I do find this like a really important topic, and not a lot of people spend a lot of time on it. But we actually considered dropping the ties. This was probably 2 years ago, 3 years ago.
Really?
And we had a management committee meeting, and it was posed to the management committee, actually by John, to be totally honest, who's traditionally thought of as perhaps the most traditional out of all of us. But John posed it to us saying, would we consider dropping the ties? And not with any agenda. He didn't either agree with it or disagree with it. He was just seeing what we thought. And we sat around the table and we said, you know what? We like the ties. And it's part of our brand. It's part of the brand. One person on the management committee, I won't name him, but one person on the management committee used the analogy of the Yankee pinstripes. The Yankees wear their pinstripes. Right. Would you ever change the pinstripes? I mean, if you changed the pinstripes on the New York Yankee uniform, there would be a rebellion in New York.
Correct.
Okay, so I don't think you'd get a rebellion here if we dropped the ties, but it's part of the legacy. It's part of the brand. It's part of what makes us distinctive from everybody else. And I like that. Right. And so we're going to keep the ties.
I love it. And how do you think that ties into, no pun intended, the culture of the firm? Because I think, ultimately this is professional services. You guys don't have some sort of secret algorithm. It's the people who work here that make KingSett.
It's people and it's mindset. Right. Okay? It's those two things. And I think it's got a huge impact on how we perform. Because as I said, it starts the day off on the right foot. It puts you facing in the right direction. Right. If you came here, if you showed up here, if all 160 of us, and just, we use the ties, we forget about half of us are women who don't wear suits and ties. But if all of us came to the office dressed in our golf clothes, or pick whatever it is, right? It would just be a different mindset. It's all about these things, and like accountability. I mean, how can you be accountable if for results if you come to the office in casual gear? People will argue with me as the day is long on this topic. Okay, so I'm under no disillusion that people don't agree with me on this. Right. But for us at KingSett, there's a level of intensity here that I'm not prepared to risk. And the dress code is a big part of that. Yeah. And speaking of intensity, I know KingSett is a big believer in setting aggressive goals, whether it's about cutting emissions or just about any other metric in the business. What kind of ambitions do you have for the company over the next decade? Well, we have always been a growing business. That's part of what makes this place so amazing. It's part of what keeps it engaging. It's part of what has made us successful. Our ambition is to make sure that we are meeting the needs of the market. Our ambition is to make sure that we're identifying parts of the market and investment strategies that don't exist or that we think are underserved, and to make sure that if our investors have a real estate need, a real estate investment need, that we can address it. So we're always on the lookout for new kinds of things. And that's why over the years we've added all these different, various strategies. And that's been a big part of why our investors have grown with us, right? So, investors that started in just the core fund today are investors across multiple platforms. And that's been, amazing to see. And we're going to continue to do that. I'd love to double the size of the business over the next 10 years.
Sure. I look forward to.
And that's a combination of making the existing funds bigger, but also finding new fund strategies.
Newer
to
opportunities.
do.
And yeah, and within that same approach of focusing on the Canadian market, but just covering just about everything.
That's right. That's right. So like an example of that would be when we started our credit business in 2006, we started with a high yield business. So doing mezzanine financings, mostly second mortgages, high loan to value, high loan to cost construction loans, bridge loans, those kinds of things. And then we realized that all of our customers that were coming to borrow money from us were going somewhere else for a first mortgage. And that was taking a lot of time. They'd have to go over there for a first mortgage. They come to us for the second mortgage. We'd have to negotiate with the first lender, and there was time and cost and friction in that process. So we started our senior mortgage business, which is doing first mortgages. And ultimately, today, a lot of those customers are doing loans with both businesses. We have they share the loan. The first mortgage will go to the senior mortgage fund. The second mortgage will go to the high yield fund. And that's been a huge advantage for our borrowers. They can come to us, one-stop shop, get all the credit they need. It takes various forms. It goes into various pools of capital, and we can address all of their needs all at once. So that's part of, that's in the line of what you were asking. I mean, our goal is to identify what do our stakeholders need, where can we create value, and let's get at it.
All right. And so we started off by, talking about KingSett. We talked about your background. I want to zoom out a little bit further and just talk about the overall economy. And this is going to be a bit of a loaded question, but any of us who follow yourself or John Love on LinkedIn know that you're fairly outspoken about your thoughts on legislation, traffic congestion, and Canadian economy. What do you think Canada needs to be doing differently to truly unlock its potential and become, and just supercharge its growth on the global stage?
I mean, there's so many things it can be doing differently. And without spending too much time on specifics, I think if you just take a step back and ask that question a little bit at a higher level, I think there has to be just a complete change of mentality. Today, the way I see it, and again, there won't be consensus on this issue, there never is when it comes to politics, but the way I see it is that our political leadership has taken the approach of there's an economic pie, it's about this big. How do we redistribute the slices of the pie so that everyone gets a piece of the pie? Okay, which is important. And it's important everyone gets a piece of the pie. We have to change the mentality though. It's not a sustainable model because ultimately you can only cut up the pie. The pieces ultimately become so small that people will just leave the room. They'll go somewhere else. So what I'm trying to get at is we have to change the mentality to say, how do we grow the pie? So everyone can keep their size, keep their pro rata slice of the pie, but we're going to make the pie bigger. So everyone will get a bigger individual piece. That's a change in mindset. And there's so many things. I mean, we can talk about resource extraction, we can talk about interprovincial trade, we can talk about immigration, housing. I mean, there's so many taxation, regulation, red tape when it comes to, in a real estate sense, red tape when it comes to permitting and zoning and all those kinds of things. There's so many things we can be doing differently, but I think at its root, what you really need is you need the perspective of let's have policies that grow the pie, a pro-growth agenda.
Right.
When you have a pro-growth agenda, we'll have businesses and people investing in the country, and then the only reason you're dealing with pension funds right now, the topic du jour is pension funds who are investing their capital outside of Canada. They're taking their capital away from Canada and going elsewhere. So now, they're pushing for legislation to force pension funds to invest inside of Canada, of course, right? Why not think about it? How do we attract their capital? Not how do we force them to stay here?
Right.
How do we make it so that it's so compelling to invest here that they don't want to go anywhere else? Wouldn't that be a better solution?
Absolutely.
And wouldn't that be a more sustainable solution? And God forbid if we actually had policies and regulations that were conducive to that mindset, we might actually see other pension funds from other places in the world investing here, okay? Right. Which would swamp Canadian pension funds investing here. So that to me is where we really have to focus the agenda. We need a pro-growth agenda. We got to grow the pie with the understanding that, and the thesis that if we can do that, then everyone will get a bigger piece, and that will be a self-fulfilling prophecy. So far with our existing political leadership, we haven't seen that, and I think that's been really unfortunate. And as a result, you're seeing negative GDP productivity, so GDP per capita. You're seeing that shrinking, not growing, and I think that's really regrettable.
For the last several quarters now, I believe up to 7.
I think 7 quarters, 7 quarters, and there's no reason. We have a growing population. We have smart people here, well educated, politically transparent. We've got a banking sector that's rock solid with access to scale capital. We've got abundance of resources, most importantly. We have land, so we have space. We have skills. We've got so much going for us that every day that goes by that we don't take that pro-growth agenda on, we are giving away value to other parts of the world. And that's really unfortunate.
And I wanted to ask you this specifically because the first time we actually met was you were doing an interview panel. It was a really nice event organized by NAOP, and I remember you mentioning that the problem isn't housing affordability. And you would know this, much better than I would. The finances of actually developing and building housing units isn't the sexiest in the world, right? Sometimes you actually end up losing money. But the problem is that the same professions and the same careers in Canada pay significantly less than south of the border. So how do we get people to earn more to be able to afford these better instead of making the housing cheaper?
Yeah, so I mean, it's a great. Did I make that point at NAOP?
I believe so.
That's brilliant. I mean, that's a brilliant point. I don't remember making it, but it does make a lot of sense to me. I mean, again, it goes back to don't force the costs down. Try to grow people's income. And create the demand side. If you can generate the demand side, the supply side will take care of itself if you allow it to. I mean, today we've got a supply problem for a whole bunch of reasons. But yeah, I think there's a lot of validity to that, and it comes back to leadership. And right now our leadership is just not focused there. They're focused on, and I think there's a political expediency, there's a political convenience to, it's easy to, it's a vote getter, right? I'm gonna give money to you. I'm gonna basically redistribute wealth, and a large part of the population thinks that that's a good thing. I think it's short-sighted, and I don't think I know it's not sustainable. So, it comes back to, I guess, our political leadership are fighting for the next 4 years. They're not fighting to build a Canada 40 years from now, that's sustainable and growing and, on that kind of path. So I don't know, we'll see where it goes, but I remain optimistic. I'm an optimist, I think, by nature. I think market forces will ultimately play itself out and dictate and put us on the right path. It's just going to be a bit bumpy between now and then.
Yeah, and all the pros that you've highlighted for the Canadian economy, we have a lot that's going our way.
We have a ton going our way. We have a ton going our way. And what's more important is not just that we have a lot going our way, but the things that we do have going our way are actually structural. So they're permanent. They're not cyclical, right? So you look at things like, today, at least in the context of the real estate, we have the interest rate story, which is obviously, a tough environment today, despite the 25 basis point cut announced earlier on today. Interest rates is cyclical. Interest rates ebb and flow. They go up and they go down. Employment would go up and down. That's a cyclical variable. But we have things that are structural, which means they last, they're part of the system that are really, really constructive. As I said, the banking sector. I mean, our banking sector, because it's highly consolidated and highly regulated, we have a banking sector that I think is maybe the envy of the world. And certainly as we went through the global financial crisis in 2009,
pretty unscathed.
I mean, it was the envy of the entire world.
Right.
And I think it remains right up there today. And I have a lot of respect for the leadership at the banks, and they run great businesses, and that provides a very, very solid foundation for what's going on in the broader economy. Population growth. People want to be here. They want to be here because it's multicultural. They want to be here because it's politically transparent. It's legally transparent. There's opportunity here. I mean, so population growth is a structural element, which I think is a huge bonus for us. Our resources. I mean, if we can just get our government out of the way so we could take them out of the ground and go do something good with them. I mean, we've got resources that are the envy of the world. We have an education system here, which is extraordinary. You know, if you can, you know, like it's probably not recognized as well as it should be, but it's a huge bonus for us. So you look at those things, and I say, like, we've got a ton going for us. We just need the government to get out of our way.
Right.
You know, and do the things that they do, and focus on the things that they should be focused on, like building transit and making sure housing is on track. And, you know, like, there's lots of things that we need the government to do. Community safety, crime and safety, policing, healthcare. Like, there's lots of things that they can be doing, but they're not. They're focused on they're focused on taxation. I mean, it is unfortunate. I keep using that word, but ultimately, I do think it will course correct.
Right. No, I believe so as well.
Yeah.
I think we've had a pretty holistic conversation. We've talked about KingSett. We've talked about your own personal background, the economy. The way I'd like to end some of these conversations is just good advice. And what would you say, looking back in your career, is the best piece of advice that you've ever received?
So, and your viewers may have seen me answer a similar type of question in other interviews, and so they may already know what I'm about to say. But because I'm on one trick pony when it comes to this kind of thing. In 2004, when I started at KingSett, I think it might have been my very first day at work. I can't remember, but it was very close to the beginning.
Right.
I went down at lunchtime. There was about 8 people working in the office, and everyone was gone. John was in his office, and I was at my desk. And I went downstairs to the food court, and I got something to eat. And I came back upstairs, and I was sitting at my desk, you know, at my computer, eating my lunch. And John came out of his office, probably on his way out, and he came over to me, and he leaned over my desk, and he said, "I need you to be out for lunch every day, going to meet with somebody." He goes, "I don't care who it is. It could be a friend, a spouse, whatever, colleague, service provider, but I need you out eating lunch with someone, talking to somebody every day. I never want to see you eating lunch at your desk."
Wow.
So I don't know if it was exactly from that moment on, but from very shortly thereafter on, I've made a point of eating lunch out. I say every day, it's probably not every day, but almost every day. I have breakfast out many mornings. I meet for coffees several times a week. I'm often not out at night. At night I go home. But I am focused on being out and meeting people every day. And the way that I look at it is, there's 150 of us in the office. If we can all go and have lunch with someone every day, that's 150 conversations a day, 150 ideas we might hear a day, most of which won't amount to anything. But you got to figure that if there's 150 ideas circulated in a day, that maybe one's probably good, two ideas might be good, right? And then we can all come back here and digest them and decide whether those are ideas worth pursuing.
Right.
And that's the basis of KingSett. And that was the best advice I ever got. And I look back now 20 years later, and I think of all the lunches and all the ideas and all the conversations that I've had over the years, and ultimately that's built my portfolio of relationships. And today, as you pointed out, that's the currency of business. And so that has grown, my personal brand and my own personal toolkit by leaps and bounds. That was the best advice I ever got.
I think we've come full circle. We started talking about relationships or ending with relationships.
Yeah.
So thank you so much for your time today, Rob.
My pleasure.
It's been a true pleasure, and I look forward to doing this again with you.
Anytime. Always happy to do it. Thank you.
Thank you.